are the 20 and the 80 price levels. I already marked these levels here with horizontal blue lines in my chart, and at the first glance you can see these levels act as support or resistance. I don't know really why these levels act as support or resistance. I just guess a lot of traders found out about it over the years, and now these levels are becoming a self-fulfilling prophecy. You can compare it like price touches at the pivot level. It's not really a technically important level, but traders pay attention to it, and sometimes you get a reaction of these levels. These levels are most significant in times of low volatility. They work best in Asia session, lunchtime, and for the European traders, or after the US session. They won't work as good in the middle of the European session or in the US session. They also work pretty good in front of big news. So every time when there's nothing going on in the market, these levels are pretty significant as support or resistance. I'm using the 15-minute time frame for the setup. I'm also looking at the close of the candle after the price touched these price levels, and I'm looking for a reversal pattern at these levels. For the target, I will always look for the next price level to get hit. So if I get in here, let's say at this reversal candle here, just below 20, I'm looking for the 80 level as a target, and if I get in at the 80 level, I'm looking at the 20 level for the target. What I don't want to see to get into a trade is a close of a 50-minute candle beyond the price levels. Here we got an example. This black candle closed below the 1.6020 level here, and that would be a deal breaker for me to get into the trade. Even if it worked, I wouldn't have gotten into this setup here. So let's find some nice reversal candles at the price levels at the right times. So I mark first of all the reversal candles at the price levels. Get here one nice pin bar candle, another pin bar candle here. Got nice pin bar candle here. Here we get another one. We even got a second touch of the 80 level in this case here. And in case you didn't take the pin bar candle here, that's not a very good one. We can always go with this as a bearish engulfing candle. You would have gotten in at a worse price, but target would also have gotten hit here. Then here we got a close about 80 level, so no signal here. It's a bit tempting to get in here, so I will mark this candle. And here we got another nice pin bar candle. So now we have to look at what times these touches of the price levels happened. So we got the touch at 11 p.m. GMT +2. This is my time zone. So that would be a valid entry here. Here we have 2 a.m. in the morning, also a valid entry. Usually use a 15 to 20 pip stop beyond the price level. So let's say if we get in here with that candle, the close was 17, I would use a 37 stop in that case, and the target, as I said before, would be the 80 level. Here we get another nice candle right before the European Open, still a valid entry, and the target up here would have been hit. We got, I didn't mark that level, that candle here. Of course, that's also a pin bar candle. But that happened right after the European Open, so no signal here. Here we got the signal also in the middle of the European session, even it worked. No entry here. Here we got the signal at lunchtime, the bearish engulfing candle, that will be a valid signal. In case you ignored that close here beyond the price level, and you would have gotten in that trade here with that reversal candle, you would have taken that setup because it's at a good time, and you would have gotten stopped out here. This signal happened in the US session, also no valid signal here, but we got a nice bullish candle here, almost a double bottom, and that will be a valid signal after the US session. And the target got hit here to the 80 level. So the target got hit here at the 80 level, and we got right away another signal here at a good time of the day. Here, and actually that here is a right entry candle. Target got hit again. We had a nice bullish candle for an entry. Let's see what time it is. It is in the middle of the Asia session, a valid signal here, and target got hit again to the pip here to the 80 level. At this time the price touched the level, the 80 level here at the middle of the European session, right at the London Open, and this is not a signal. Sometimes also this signal is working in the middle of the European session, of course, but the success ratio is not as great as in times of low volatility. But in this case we have a London Open, and this is also often a time of a reversal, so you can take it, but I wouldn't have taken it. So here we got a close beyond the price level, no valid entry. And here we got also a close beyond the price level. So I will give a brief summary about the strategy I call the cable 2080 setup. The 20 and the 80 price levels often act as support or resistance in the pound dollar. They are more significant in a time of the day with low volatility. The Asian session, the time between the European session and the US session, and the time after the US session are good times to use this strategy. I use a 15-minute time frame for this. Look for a reversal candle around the price levels, and if a 15-minute candle closes beyond the price levels, don't take the trade. The stop loss should be around 15 to 20 pips beyond the price levels, and the target is always the next 20 or 80 price level. This is a really good strategy if you like to trade the cable, and if you liked the video, please check out my other videos at liveforexdaytrading.com. Have a great day all, bye.